Greetings, members, one and all of the Salivation Nation. Silver hammered by this. Let's explore. Indeed, the hammer is dropping on silver prices again. It is something else. Frustrating, I know, for many stackers out there. But there's other reasons I believe that the silver price rises and falls other than just manipulation. And I believe there's the natural market forces are probably the largest driver of gold and silver prices. Although, as you know, I'm not discounting manipulation. We know what happens. I've covered it on this channel. And I'm even more open than ever before to price suppression for silver. Although I do think there needs to be some hard evidence, not just circumstantial evidence, in order to really bear that out. Although I do believe it's time that there needs to be more of insight investigation in that realm. But that's notwithstanding, the price is getting hit hard today. In fact, all of the precious metals have seen some pretty big drops today. And there's a reason for it as we end this week out here, as we take a look at the precious metal prices. Indeed. In fact, silver, as I record this video, is down over 1.7% on the day. So that's just over a 40-cent drop in the price of silver. In fact, it's heading closer and closer to that $24 level. But it is an opportunity for us as buyers, as I have started to see some deals out there for some of the bullion dealers out there for some silver products. Usually it's going to be larger bars, like 10-ounce silver bars and the like. You get some bars. That's one way to be able to stack your silver, is to get yourself some bars that are recognized and known and get it for a little bit cheaper than you normally would. But nonetheless, the hammer is certainly dropping, and it is going to probably continue to be the case as the Fed starts to ramp up its rate hikes. In fact, some are calling for 3 rate hikes. We're going to refer to an article here from Kitco that what is really hammering down the silver price. And it's not necessarily the rate hikes, although that is a result of it. Gold and silver prices are lower again in early U.S. trading on Friday and late U.S. trading, pressured by rising bond yields. That's right. A higher U.S. dollar index and lower crude oil prices on this day. And we know that some Fed speak on Thursday afternoon reminded the marketplace just how hawkish the U.S. central bank has become in the past few months. And that has reflected on silver prices. And that is where we are at here. COMEX silver was last down about 30 cents, and it is hovering around $24.30 some odd cents. More likely, that's how the week is going to end, with silver hovering around that area. Risk appetite remains tepid at best. Traders Thursday afternoon got another dose of hawkish U.S. monetary policy rhetoric from Fed Chairman Jerome Powell, suggesting the Fed is on an aggressive tightening path in order to put the brakes on the problematic price inflation. Indeed. And if you enjoy reports like this, I hope you will consider pressing the thumbs up button, hitting the notification bell. It does help the algorithm, which has not been too kind to this channel as of late. But nonetheless, U.S. Treasury yields surged and stocks slid after Powell, in a speech at an IMF World Bank meeting Thursday afternoon, reiterated a bias for strong U.S. interest rate hikes in the coming months. Many people feel like there are months, in fact, maybe even a year too late in this. Traders and investors are now expecting 50 basis point increases at the Federal Open Market Committee meetings in May, June, and maybe even July. So that's 3 times that they could raise the rates up by 50 basis points. That's a 1.5% rate increase at the core level there. And that will reflect every time you use a credit card, you get a mortgage, But guess what place it's going to have the least impact on your savings? So if you put your money in a savings account, you're going to get pennies on the dollar, pennies on this, or fractions of a cent on the cent. That's what we're getting now. So we may see get to maybe 1 cent on the dollar, but I highly doubt that's going to even be the case. They don't get that much. It's just crazy. It's literally robbery that when you store these Federal Reserve notes, which again, as I reiterated in prior videos, this is indeed something that we all need. It is not trash. The dollar is indeed still king. It's king being the cleanest of the dirtiest shirts in the laundry basket. But it is something that we still utilize. It's just that it is a losing value and it's a losing proposition to store it for a period of time, which is why silver comes into play, which is why this provides an opportunity. So even with these premiums, when you think about silver, think about it this way. And it may warrant a whole separate video on this subject, but think of the money you lose when you save in dollars. And I'm not against saving in dollars, by the way, for the highly liquid savings fund if you need it for emergencies. For the here and now, quick emergency, where you have your dollars, you got them, you spend them, you do your thing. But silver is a way to store your wealth over the course of time through the medium term and long term. And even though it's losing a little bit today and maybe even through the course of the next couple of months, depending on how these rate hikes turn out, in the long run, it's going to preserve your wealth. Look at where silver was before the pandemic. Look where it is now after the pandemic. There's a lot that's been happening economically. It is up considerably since then, and that is a fairly good measuring point, as you've heard me talk about this, but somebody else had pointed this out on in one of the comments that, that is a good measuring stick to where it was before the pandemic, below $20 an ounce, comfortably below $20 an ounce. And here it is at $24 and a little bit of change. And that is something to consider here. Now, does that tie in with the rate of inflation? I haven't done the ratio of that between the rise of silver's price between where it was before the pandemic to where it is now, because you can pick any kind of numbers between anywhere in 2019 and make that ratio play out one way or the other. But I would say it's pretty darn close, and it's pretty darn close to preserving your wealth from inflation during that period of time. And I think that's probably a fairly good measure, is during that time between the before the pandemic and after the pandemic. We've seen a pretty solid resistance level there. However, some theorize that if these rate hikes come as aggressively as they say they are, that in this short term we could see below $20 silver again for a period of time. I don't think it'll last long, though. I am overall bullish on silver. So this is why I think it's good that this metal here is not as liquid as dollars are, and which is a good reason why it's a good idea to have a little bit of money outside of the banking system, outside of the monetary system as it holds now, and that is to have silver. Hold silver. And by the way, I'm also a stronger proponent for gold than I am silver, but I am still a proponent for having some silver as diversification, understanding that it's volatile, but it is the metal that I think will certainly break out in the future in some way or another. And in fact, when you look at the pandemic and all that's been happening here as of late, even though it's not performed as highly as we like it to, it has definitely performed overall. And that's something to consider here. So that's where we are at, where we're heading in the next couple of months here. Powell detailed his most aggressive approach to taming inflation to date. Meanwhile, markets are factoring in 25 basis point rises in European Central Bank interest rates in both July and September. A Barron's headline reads today that Powell, the hawk, may send stocks further south. And so if stocks fall, that could put a little bit of pressure on the dollar and actually work against what some of the activity is, and against inflation. We could have stagflation. That is the fear. That is the needle, the eye of the needle that they're trying to thread. The Fed is to try to prevent stagflation. I'm almost think it's almost inevitable now, but we are seeing oil up, but it is trading around $100, $102 a barrel, and the U.S. dollar index is still yet even higher earlier today because of the yield on the 10-year U.S. Treasury note is fetching around 2.945%. It could hit 3% soon. U.S. economic data is due to release includes U.S. flash services and manufacturing purchases managers index, and more IMF and World Bank meetings are taking place in Washington, D.C. And we know what their ultimate goal is to plan central bank digital currencies, CBDCs. That is the future, and that is kind of where we're at, and all falls in line with what they refer to as the global reset. And JM Unleashed actually can mention that it's not really much of a reset, because when you think of a reset, you think about resetting things back to the way they used to be. That's typically what a reset is, but it's really a recreation. And there's nothing great about it, that's for sure. It may be a massive undertaking, but that's really where it boils down to. It's not great. It's not really a reset. It's really a reinvention of the monetary system under the guise of tracking environmental, social, and governance, with heavy emphasis on power consolidation by central planners. And I'm not talking about central planners in your respective countries, United States, Great Britain, Germany, France, India, or wherever you may be. I'm talking about central planners likely related around a global system, the IMF, the United Nations, and they're all tied in together, even if loosely, even if they deny it. When you have a system that is based off this ledger, like blockchain, that's where the real concern is there. So interesting and fascinating indeed, but let me know what your thoughts are in the comment section below. The hammering is taking place now, but you can protect yourself and do not be discouraged during this time. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and I want to encourage you to please rate this video. Please thumb it up, share it. I do encourage you to please share. Not many of my videos do get shared, but if you could do that, I would very much appreciate it. Comment, and if you haven't done so already, subscribe. I want to leave you with this final piece. Because of the algorithm being the way it is, I would encourage you to bookmark the channel page. Bookmark the channel page if you do like to get daily videos on this channel, and to bookmark the channel page and just refresh it. Twice a day at least I'm posting videos, and that's going to be your best way, I think, so we can get around the algorithm. I'm at the mercy of the algorithm, but it takes you, the viewer, if you're interested, to keep watching. That's the best way to do it. So again, a multitude of gratitude to you all.